Hi guys, and welcome to my channel. We are going over the latest updates around XRP and Ripple. So be sure to subscribe to my channel and like this video. So Ripple wants to stop the SEC asking foreign regulators for assistance with the XRP investigation. There has been yet another development in the legal battle between the Securities and Exchange Commission, or rather SEC, and Ripple over the sale and classification of cryptocurrency XRP. The SEC recently delivered a letter to the presiding judge objecting to a motion that would prevent the regulator from asking foreign authorities for data relating to the transfer of XRP to crypto exchanges based outside the US. Without this information, which Ripple claims it does not itself possess, the SEC cannot establish a timeline that may show Ripple deliberately executed a marketing strategy designed to lift the price of XRP. In December, the SEC launched a surprise lawsuit against Ripple and two of its executives, co-founder Chris Larsen and CEO Brad Garlinghouse. The regulator claims the ongoing sale of XRP to individual investors amounts to a violation of securities law. The SEC hopes to bolster its case by proving Ripple deliberately manipulated the price of the cryptocurrency with strategically timed announcements. So far, analysis of crypto wallets belonging to Larsen and Garlinghouse has revealed that massive quantities of XRP were delivered to exchanges headquartered on foreign soil. However, according to the SEC letter, Ripple has not turned over a single document concerning a non-US domiciled digital asset account or otherwise explained the significance of these XRP transfers. The regulator is now fighting to preserve its right to seek out intraday trade data for XRP by other means, via foreign trading platforms. While the SEC also attempted to obtain this information directly from Ripple, Ripple recently told the SEC that Ripple does not have it either, leaving the only avenue for investigation offshore, the letter explains. However, it doesn't sound as if inquiries are off to a strong start, with requests to 9 different foreign regulators leaving investigators all but empty-handed. As per the letter, 2 regulators declined to offer assistance, and a further 3 would not allow the SEC to publish their communications. Just 1 regulator suggested the SEC may be able to use conversations between the 2 parties to assist in its case. If the judge were to grant Ripple's motion, the SEC would have to cease and withdraw requests made to foreign regulatory authorities, effectively putting an end to this line of inquiry. But here is the big question. Could the XRP become the digital dollar to rival China's digital yuan? The United States and China, 2 of the world's largest economies, have been at loggerheads. As the crypto industry evolves and matures, new trends and innovations are introduced. One such is the central bank digital currency, CBDC. Unlike traditional cryptos, these assets of central banks will be backed by the nation's cash reserves, thus making them more stable. China has already scheduled the digital yuan to be launched at the 2022 Winter Olympics in Beijing. The United States, on the other hand, hasn't made much progress in the development of digital dollars. As a result, there have been different speculations about which asset could emerge as the CBDC, including Ripple's XRP. Although just receiving media attention in recent times, the development of the digital yuan began as early as 2014. In February, WeBank and fintech giants MyBank were selected by China to experiment and test the digital yuan. The project is already in its later stages and is set to launch later in 2022. What is the relationship between the XRP and the digital dollar? In 2020, Brad Garlinghouse, the CEO of Ripple, noted that XRP might prove to be the ideal solution for central banks. He opined that XRP would act as a bridge asset for central banks. The point of Ripple's efforts is to enable a lot of efficiency and liquidity between XRP and the US dollar. Despite the ongoing legal battle with the Securities and Exchange Commission, SEC, Brad Garlinghouse has also asserted that now is a crucial moment for the US to establish itself as a leader in the booming crypto business. In March, Ripple piloted a private ledger for central banks seeking to launch CBDCs. The CBDC private ledger is based on the same blockchain technology that powers the XRP ledger, XRPL, which means that the CBDC private ledger is built for payments. On the flip side, this piece is in no way endorsing the cryptocurrency XRP, but shows a possibility based on trends. Ripple's XRP current price of $1.31 is roughly 60% below its 2018 high of $3.31. The United States and China represent 2 of the biggest countries in terms of crypto regulation and 2 differing views of the industry. As the quest for dominance continues, we may see these countries continue to be pitted against each other. As China moves closer to achieving the digital yuan, we are bound to see a response from the United States. The U.S. Central Bank has already listed preconditions for a digital dollar. Could the entire development process of a CBDC be skipped for established cryptos like XRP or in favor of another CBDC like the Sand Dollar digital currency? What do you think will be the turn of events? Now for Bitcoin. Bitcoin's domination of total cryptocurrency market value is declining as its next biggest rival, Ether, reaches the $3,000 milestone. The rise of Ether suggests there's room for more than one winner among digital tokens as the sector evolves. Bitcoin now accounts for about 46% of total crypto market value, down from roughly 70% at the start of the year, and Ether makes up 15%, according to tracker CoinGecko. Bitcoin remains the biggest cryptocurrency, but the momentum in other tokens is drawing increasing interest. Proponents argue investors are getting more comfortable with a variety of tokens, while critics contend the sector may be in the grip of a stimulus-fueled mania. Cryptocurrencies were broadly higher on Monday. Bitcoin climbed above $58,000, while Ether jumped 6% to $3,151 as of 8:17 a.m. in New York. The current distribution of market share also reflects an April shakeout in the cryptocurrency sector. Bitcoin has yet to recover all the ground it lost after tumbling from a mid-April record of almost $64,870. Anyways, thanks for watching, guys.
Yeah, well, I think you got to respect the price action last week, Scott. And, we talked about it last week, and you're bringing it up now. It was frankly not good. I mean, it wasn't terrible, but it was certainly meh. It was tepid after blowout earnings from tech. So we're certainly not getting a catalyst from tech earnings. Now, you do have a bunch of industrials and energy names reporting this week. I think they're going to be good, but honestly, I'm not expecting a strong market response. I don't think this is fatal, though, Scott. I don't think this is something where you've got to do that sell in May thing that I absolutely hate. I hate that adage. I don't think it's useful at all. I think at worst what you've got is a sideways consolidation period here. But you get into the summer and you get a little bit more clarity on taxes for next year as those negotiations go on. And you may hate my saying this, Scott, but even though Jay Powell was very crystal clear last week, I still think the market doesn't believe him. And over the summer, if he's going to start talking about tapering, that would be the time to do it. So maybe if he doesn't, then the market gets a little bit more wind in its sails. All of which says throw out that adage of sell in May. It's a useless adage,
it is,
especially when you've got as much going on this year.
Just go by history's sake. I mean, in the last 8 years, the major averages have only fallen one time in May, and that was in 2019. So
yeah, look at last year.
Yeah.
Look at last year. If you sold in May last year, you missed out big time.
Well, I mean, come on. The cavalry came to the rescue along with the Army, Navy, Air Force, and Marines. I mean,